and the 1.
Who remembers my parting words from yesterday's show? The Bulls better step up to the plate and they better take out the 45-40 area. Well, you're going to be looking at the chart. They got it there, and then the Bears came in. The Bears are in control. These rallies cannot hold. Not much earnings. We got a special show lined up for you guys on this PPI Friday. The friendly Raghee Horner at 8:15. It's Friday. We're fired up. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're starting out in the hole just by 3 handles at 44.8275. Got to get back over 4,600 today. The Bucks in the red by a couple pennies at 102.34. Bonds down almost a half a point at 121 and 10/32. Crude in the 83 handle, up 84 cents, 83 and a quarter. Gold stock up 220, 1951 even. Silver, that's in the red by a nickel, 22.77. And Bitcoin back in the 29K handle, up $20 at 29,515. First, I'll bring in Triple D. Triple D, I mean, what you talk about the first half hour of trading and what a rally, and then it all came unraveled.
It's the story. It's been the story. Intraday, we go up in the morning, early morning, and then we tank all afternoon. We have seen this again and again and again. And it's just the pattern that we've been seeing. If you're chasing the rallies, you are doing it absolutely wrong. And like we were saying, sell the rip is working better than buy the dip did all year. And again, if you're selling that rip, yesterday morning, it went up even more after the open, but eventually 2 hours later, you're rewarded for it. So this market can't hold rallies. Market was overbought, had an incredible 7 months, and we're in a correction period. And we've been talking about this 5 to 10% correction. And you know what? Where are we now in the SPY? We've been talking about it for, we were down 1.5%. We started talking about this 5% correction, 5 to 10, 459. So yeah, we're talking like the 430-ish. So we're halfway there. We're halfway there. I think you get down further and I think you start looking, maybe getting your shopping list ready. But right now, if you're thinking about, how I can make money in stocks, it's more how to protect your capital in stocks right now. And yesterday proved that.
You have a triple bottom in the SPY. Let's just call it 445. We're trading above that. S&Ps, the levels are pretty much the 45 or 44.75 area. So clear line right now. I like the spider chart. It's a little bit cleaner at the 445. We'll see what happens. Let's bring in Money Mitch, who's been urging some caution in the AI stocks here and some other things. But Mitch, why don't you take the lead? Tell them what we have in store for today's show.
All right, team, we're going to have a fun show. Of course, we'll be getting our guest on in just a few minutes at 8:15. We'll have Raghee Horner joining us, of course, one of our favorite guests. And then we'll get PPI to come in at 8:30. Don't forget that. That definitely can shake things up. Of course, CPI coming in yesterday a little light. That was unexpected, but definitely something that we're going to be watching for. And then after that, that's really where the gift comes to you guys, where we're going to do a little bit of special ticker time. So have those tickers ready already. Know what you want to talk about. And if you have a topic that you want to talk about, this is your day. And don't forget it, guys. You guys run pre-market prep also. So we're here for you guys today. Let us know what you guys want to talk about when we get there. Let's keep going with the recap of the week. It seems like, of course, the markets can't hold rally. What have we started to see? Of course, we started to see some of these AI stocks really start to crack, and especially the momentum names like Upstart, Carvana, Affirm. We got to really keep our eyes out on names like this because we've talked about it. The trend is your friend on these names until it isn't, and you can clearly see that on the Upstart chart.
I mean, Upstart is nothing short of incredible here, and we've been talking about this for the last few days. 6 days ago, like August the 8th, so 1 week ago, this stock was right up at the highs at $71. Then it had that candle, and we knew when it had that candle, this is not good. You got to be selling, any rally you get. But you know what? He didn't get any rallies at all in this thing. It was down $8, then it was down $10, then it reported earnings and fell another like 30%. Then it continued to go down, and then it's down another 6% yesterday just to slap you in the face. The stock went over 2-for-1 stock split here, Joel, in literally 6 trading sessions. This might be the most from bliss to piss stock that we have seen on this show in years, because you had that entire awesome run up, May, June, July, just killing it up 600%. And then boom, 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 all like 65-70% of it gone in literally 6 days. This is incredible.
You would think that Upstart, the upper right chart, you would think that's a monthly, right? Went into a little bear market over 70, down to 30, but a daily? I mean, it's a daily. It's over a 2-for-1 stock split. But we mentioned this earlier in the week, and it's always tempting to get run over in these kind of moves and try and pick the bottom. But I'll do it. You have $30, and I'm not going to give you. Yeah. Yep. I think so.
It's got to bounce somewhere, doesn't it?
It has to.
We're trying to catch the knife that was thrown at us, though, and we're trying to catch it. So it's a gutsy call, but I think it could bounce at 30. It's come all this way. It looks like it wants to trade 30. It looks like that number sticks out to me like a sore thumb there, the Harlan Pine style. Yep. $30. I think it could bounce it. But again, the risk is incredible because, if it goes starts going 29 on you and then 28, and it's like, okay, well, this didn't work out. And the low actually is 28.99, the low from. So you could cut through there and, shake anybody out who's going through 30, maybe go to that 28.99 low. But you think this thing's just gone straight down to 20 and then to 10? I mean, it's got to bounce somewhere. Money Mitch, don't have to bounce somewhere.
This is not investment advice.
Really. Or is this just downstart? Definitely not investment advice. Not going in the long-term portfolio.
You have to yell at it. Down, stop, down, stop, down, stop.
Yeah, downstart, upstart, who knows?
This is the truth also. Is just look at the other ones too. It's not, they're not looking too much better. Look at Affirm. The price action in Affirm lately. That's not looking good either. I mean, we look at Carvana and even
all the short squeezes.
Even bigger stocks. Like look at Roku's chart. That was just massively ripping, and everyone was like, what the hell is going on here?
Yeah.
Look at the last couple of days. Look at that. Bam, right back down 20%. You know what I mean?
Going back to the Upstart, just real quick, what I kind of look for in these kind of moves is like when the volume calms down. So the real bad day 2 days ago, it traded 34 million. Yesterday was a bad day, not as bad. It traded 22 million. So that, to me, it's like, okay, everyone that wants out of the pool is getting out of the pool, right? So that's where I kind of look at it. If the volume comes down, it's just a relief rally. It's just a lack of a seller's rally.
Mm-hmm.
One other thing I want to bring in, Dennis, and then this happened, and Mitch, the Russell rebalance. I mean, it didn't have like the immediate effect, on the Monday and Tuesday, and I know the market dynamics have changed, but Apple had earnings. I mean, do you think this is maybe a kind of a secondary effect of the year? I mean, there's coming out of a lot of stocks, but it's definitely coming out of some of the big stocks too.
You keep saying Russell rebalance. Are you talking? You're
talking
NASDAQ.
So Joel's got a verbal tick here, and he keeps saying it on the Russell rebalance because it's the big rebalance we talk about every year on the 4th Friday of June. But he means the NASDAQ. So that NASDAQ rebalance where we had that. I think the effects for that are over. I think it did kickstart. The sell-off in some of the mega cap tech names. And that has kind of just the momentum. It kind of beat up the momentum a little bit, and they kind of knocked it down. But not only that, what really knocked it down was Tesla reported a pretty good quarter. Netflix reported a pretty good reporter, and they hammered the stocks. So then you could see that the investor bar that we've been talking about is just simply too high. And that's why, Apple got beat up as well on its report. Microsoft got beat up on its report. The bars were just too high, Joel. It was like expectations of investors, were just like they thought that they were going to all pull in NVIDIA, where they were all just going to blow it away and raise guidance by like 30%. And we're all in this, they were all in this fairy tale la la land.
Yeah.
And now it's a dose of reality, and these stocks are coming off. Now, I hope they continue to come off because there's going to be an opportunity here to rebuy some of these names. So, like I said, have your shopping list ready. But are we early here yet? I mean, there's certain stocks, and I've been talking about Enbridge, so is Jim Cramer. I still like certain stocks, certain sectors, value names, but I think you've got to put even as a trader right now, you almost have to have your value cap on here. Like have your value cap, because it's not working to just buy the dip on all of these growth names, because the dips are getting worse. The dips continue to go down. But if you look, there is separation here. Some of the names that have the lower Ps, forget about GM and Ford because they got their own problems with the strikes, but some of the other names have been holding up fairly well. It's really the higher PE stuff or the zombie companies that don't make money that have really been getting hammered. Kathy Wood is taking it on the chin here in the last 6 days, from 51 down to 42. She just gave back half of her rally when she was tooting her own horn there on CNBC about 2 weeks ago, saying how good that she's been performing. Meanwhile, we know it's not the truth. She's been stocks, or the ETF's been going up for the last 2 months. The last 2 years been an epic disaster. And boom, the market punished her for her arrogance when she was on CNBC there. And it's literally, they've been punishing all those stocks that don't make money, and she's got a portfolio of them.
All right, I have a good chart here that I wanted to bring up with this conversation, and I think that we've all heard about AI and how many mentions are being called out in, of course, on calls. And so here's a graphic. It came from Reuters, so shout out to them. They always have like really great graphics on their wrap up here. And this is analyst calls that have mentioned AI at least once. So in 2023 Q2, more than 30% of companies have mentioned AI on their earnings call. Doesn't this seem very similar to the metaverse and what we got before that? It just seems to me like
Metaverse was the metaverse was one company.
No, it wasn't. It was a whole theme where everyone started mentioning
There was
the
a lot of
metaverse.
smaller companies talking about the metaverse and how they're going to profit. I mean, you don't hear.
I mean,
anything
smaller
about
companies,
metaverse
bigger
anymore.
companies too. Disney was one of those that kept mentioning it, right? And we heard Meta mention. I mean, they changed their whole name,
Yeah,
right? And
I
so
kind of look
think
at
the
more
hype.
meta specific. I mean, I think this AI is so much more expansive, and there's
So much
so
more
many more.
encompassing.
Yeah. Than the
But it's
metaverse.
like I said, though, like, and I've been saying it all week, and I'm going to continue saying it. Show me the money, because the money's not here, guys.
It's
That's
too
the
far
truth.
away.
The money
It's
is
the
not
money is a
here.
long ways away on all these companies. I think Microsoft was really, that gradual comment. Like
Go back to.
it's just everybody was living in a dream world to a certain extent. But again, I think the AI, to Joel's point, is much different than the metaverse, because I think the AI is going to be, I don't know if everybody's going to sit and drink coffee in the metaverse, but I'm fairly confident that automation, the continued process of artificial intelligence is going to change our lives. So I do believe AI is as big as the internet once was, but I watched what happened. And here's what happened in the internet bubble is the internet was going to change our lives. We were watching going 97, 98, 99, 2000, 4 or 5 years, just relentless bull market. We're paying 80 times earnings for stock or 100 times earnings. Who cares if the stock doesn't make any money? This is what happened in 2000 and then obviously March 2000. The bubble started to break, and it didn't just burst, like we didn't just crash. It was death by 1,000 cuts for all these companies. And what happened was, you had that first 6 months of, sell off. And then we had this ridiculous rally, which a lot of people forget about, towards the end of 2000. And that was the selling opportunity. And then we started taking out the lows and making new lows. And that's where it just got, disastrous. And Amazon was down 96% from the highs, one of the only ones to come back, because everybody points out, well, if you would have just bought, but there was a lot of pets.coms that didn't come back. So a lot of stocks didn't come back. Microsoft took 15 years to come back from that. So I think you just got to keep in mind when you're trading, it's one thing. You can trade momentum, valuations, story, all that stuff. Valuations don't matter if you're a trader. But when you're an investor, you've got to be buying at reasonable valuations. And some of these stocks, Mitch, to your point on the AI bubble, the valuations have just become unreasonable, and you're getting a correction of that.
Yeah, I think that's something that we all need to be looking for. And like I've mentioned, it's not that I'm saying that AI has no revenue. It's just actually show me more numbers. And that's why everyone's going to be watching NVIDIA's report to see what happens on that. But of course, that doesn't come for another 12 days. So who knows where the market could be by then. All right, let's go ahead. Let's bring down our charts. Let's go to our guest today. We're going to go ahead and we got a special one like always. One of the favorites out there. Let's get right to it. Raghee Horner, Managing Director at Futures at Simpler Trading. Let's get to it. Raghee, how we doing today?
I'm doing well. How are you doing, Mitch? How you doing, Dennis?
Hey, excited about new opportunities. That's the way I'm going to address this because, of course, we've got now a pullback. We've been talking about it more being a correction here. Is that how you see the market?
I look back 5 to 10 years. So when every new month starts, these are old habits from my commodity futures trading days. You know, you got to know what corn would do, planting, harvesting, you know, all that stuff. And while I don't necessarily think S&P and dollar and so forth are super sensitive to these seasonals, if you look at August, I mean, we should take a Dramamine at the end or 10 at the end of July because August nature is just one that up and down, it just finds a range and it chops up like a Ginsu knife. So overall, I'm a little bit bullish still because we saw that CPI data keep expectations for the Fed not to hike, at least in September. So I'm a little bit bullish, but it's going to be a rough ride.
Yeah, it's just not going to be as easy as maybe the first half was. But I still stay in the camp like I'm not full bearish here. I think we just need a correction. And I've still got a shopping list going. And I think as you get down and some of these stocks come down to more reasonable valuations here, I think you strike. I think you have your shopping list. But I don't think it's going to be like the first half where we're up, 30% on the NASDAQ and we're just tack on another 30% in the second half. I mean, stocks just don't go straight up normally.
They don't unless, Powell's S&P target's public, until he's telling us what that is. But I have a hard time, so I think correction's a great word, right? So mean reversion, correction. To me, where is the previous floor? Where are volume levels sitting? Where folks have already put their bets in? I don't know that we see anything cataclysmic. I'm not that bearish. Am I looking for something down at the 200 exponential like we did, say, September, October of last year, or even March of this? I'm not looking for anything that quite panic-filled. But to your point, shopping. I would love to go shopping.
What is on your shopping list here? Do you have some stocks on your shopping list that you're
Boring
looking at?
things. Yeah, boring things. So my
What do you
shopping
got? What do
list,
you got?
I mean, it's super boring. It's definitely usually a weekly time frame or a daily. And it's, when can I buy the SPY? When can I buy the DIA? Where can I jump into healthcare, Staples, Coke, Walmart? It's really, really boring. I'm not looking for the next up and comer. I'm looking for things. I remember telling you guys we're talking about 2000. I remember telling my mom, I'm going to put this in your portfolio. She let me start managing money very early because she saw I had a knack for it. So mind you, your kid's telling you there's this book company. We're talking about 2000. Let's start scooping that up. Let's start buying things like that. And so I look at her portfolio and I think if you take that willingness to wait 6 months, sometimes a year for those moves, shopping, as you're saying, and when everyone else is panicking, you're picking up things in Q1 of 2019, Q1 of 2020, because your time horizon is not measured in hours or days or weeks, but rather years. My mom's cost basis in some of these things are ridiculous because that's the process that we did. So I'm just trying to enact that now. It's harder now. But that 200 on a weekly, that 200 on a daily, it's gold. It's easy.
Where does that come in? So let's just take it. And obviously, we've been extended here on the 200. Money Mitch talks about the moving averages for a while. Me and Joel aren't huge fans, but I can respect, that you're coming into an area where a lot of other traders are looking at it. Where does that come in? Maybe you can show. Can you show your charts?
Yeah.
We never
Can I, I'll show you the sure.
Yeah.
Let me show you. I'm looking at the
Yeah,
S&P
let's
right
do
now,
it.
but yeah, let's do it. They're kind of loud and crazy, so I always hesitate for people to look directly at them. You might
Oh,
want
I
to
know
avert
how it
your
is.
eyes
I
until
know how
tell
it
you
is,
everything
Raghee.
going
I have
on
like a
here.
little, I have a little show button where I take off all the like the levels and stuff because people just sometimes they get confused. But hey, here's the gold for you guys. Let's take a look.
This is the S&P futures, right? So if I'm looking at S&P futures, and by the way, all I have on this chart, I know everything's color coded because I cannot see and I have cataracts in both eyes.
Nice. So you got a
Everything's
big,
got to be like Skittles, okay? So if you want
I
to, oh my
like it. I
gosh,
like it.
it
I've got an
suits it.
anchored VWAP on here. That's the teal line. The dots are the 200. Notice how the 200 exponential and the anchored VWAP are just hanging out with each other. And then
Yeah.
all I'm looking for is when we get down to a 200 exponential. So here's your S&P. Here's March. I think if you look at SPY, it's going to look very similar. I like looking at the S&P futures for the SPY, but there it is. When I see those white lines or an anchored VWAP to the first trading day of the year, I get to work. And it might only happen a handful of times a year, but if I'm thinking about a year, 2, 3 holding, I don't care, right? I mean, XLK,
Exactly.
I mentioned last October. So anyways, I don't want to get y'all, that was weekly, by the way. So I don't want to get all obnoxious with these screens, but yeah, that's what I'll look for. And it doesn't have to be all the noise that I've got there, but that 200 is magical.
Raghee, I want to
200
ask
looks a
you.
long ways down.
It does until we get there, right? It's never going to be easy. It's never going to feel like we want to buy, right? When we sold off in March, it didn't feel good. It didn't feel like this is a great safe place to do it. And it never feels that way. It's always going to feel like a fire sale. That's what I found.
Raghee, I wanted to ask you, you made an important point. You're talking about investing, for your mother, also investing for the long term, and help us, because we have our chat, we have our audience and stuff, and we talk to a lot of different people that have a lot of different time frames and objectives and everything. And what we probably don't get across enough is, like, the younger you are, the more aggressive that you need to be. And I think with what people have seen in the markets, I mean, people of the next generation have gotten smoked a couple times, right? How do we relate better to younger investors out there? And when I mean by younger, a lot could be younger than us, but like the 25, 35, maybe even 40 time frame, as opposed to, people that are, like me, that are, moving on and older in life. How do you
So
get
what?
that across?
Just let me make sure what age is moving on. I'm going to be 52 this year. I got the grace
Ah,
to show for it. So how
uh,
do we
You're
talk to
still
young
young,
people?
The new
Rocky.
20, I heard. The new
The new
yeah,
20.
I know.
20.
I'll tell you right now.
I'm almost there.
So
Yeah.
the way I look at I look at it this way. If I were starting off today and I'm 25, 27, 32, whatever it is,
Yeah.
never has the playing field been more level. When I started off in 88, 89, oh my gosh, I couldn't even direct my own order flow. That didn't happen
Yeah.
to 95 with cyber traders. So now I'm going way back, right? The idea
Yeah.
of paying a higher commission so I could look at the bid ask level 2 depth of market, that was unbelievable. And that was only 25 years ago,
Uh-huh.
right? So if you're playing the game today, never before have you had access to people that are seasoned and made all the dumb mistakes before. Never before have you had a more level playing field with indicators, information. I mean, so it's both good and bad because sometimes it can be a bombardment. But what an exciting time to be a trader now with everything that you have. The other thing is compartmentalize. So I'm going to day trade. What time is it now? 8:24 and 9:30. I'll be day trading the first hour of the day. I've got a 5-minute chart. I'm going to be buying calls, buying puts, trading futures for about an hour. So I'll day trade, but then I'll stop. And then that allows me to open up and make space for some swing trades. What kind of opportunities can I see that will follow through for 1 to 3 days? Johnson & Johnson's been a good one. Freeport McMoran, I've been all over. Where are those smaller windows where there's going to be overnight exposure? Once again, with maybe options dated 2 weeks out. Then at the end of the day, I've done about an hour of day trading, about an hour of swing scanning. You change hats again and say, where are the longer term opportunities? And that doesn't have to take all day, right? Depending on how much time you want to dedicate to each. So I think we just have to accept it's just not one way to do it. We just separate our day out to be able to do all of it. And I don't know if that answers your question, but if anyone's starting trading or investing now, yeah, we're not going to, my mom's cost basis on Amazon is under $20. It's ridiculous. Those days aren't there, but I'm not going to lament that. I'm going to say, what do I have now that I want to hold for the next 5 years. And there's some good opportunities.
Give us a stock or two that you'd like to hold for the next 5 years, because we have a lot of investors listening here right now, some younger people that are like, what can we buy here, to possibly make money in the next 5 years? What do you like for the next 5 years?
Think about how the indices are constructed. And I know the most boring thing in the world is for me to talk about the diamonds, the Qs, the SPYs, and maybe the Russell, right?
Yeah.
But think about how the indices are constructed. We hear about rebalancing. We hear about, the yearly, what's removed and what's added. They are geared to dump the weak and add the strong.
Truth.
If you look back in a log chart of these indices, they're high concentration weighted, and they're going to be geared towards the upside. So while down moves happen, when you step way back and say, what is the general direction? It's up. And I don't mean manipulated in a bad way, but they're massaged, if you will, to dump the weak and add the strong, right? Whether that was the Russell rebalancing, or the NASDAQ was, the NASDAQ is more evenly balanced. No, it's not. It's still heavily weighted and geared towards those same names, just less so. So why not play the game the way it's made, not lament how it should be or what it could be, and just say, this is what I've got. This is how I'll trade it. So SPY, DIA, QQQ, Russell. I love keeping staples and utilities on dips, because you never know when you're going to need those defensives. Bonds are an easy thing to wait for, right? TLT. So there's so many ways that I can trade these things that are boring as hell, but keep that longer time horizon.
I think it's also important what you're mentioning there, right? And not having just all correlation into one area, because that's easily how you get this rotation against you. And then now you have the, the goo eyes looking out and being like, well, now I have nothing in my favor. And I think that's so important for traders to kind of understand that, yes, at times you're going to want to have exposure to different areas so that you can make some gains while the others decline and get that correction.
I mean, housing right now, XHB, ITB, I take a look at that. There's a lot of things that even if the time horizon is 6 months, pull up that daily time frame. Those I haven't heard a lot of discussion about how housing, home builders have been moving, generally speaking. But you take a look at the trends there. It may not make a lot of sense. Oh, rates are so high, and yet there are the uptrends. Pulte, DH, Home Depot. So again, I like boring. I'm the world's most boring trader.
Hey, sometimes I'll tell you what, boring can make some good money, right? And that's what is important here. At the end of the day, I always like to remind traders, we're here to, play the game of the markets, but what we're really here for is to make some money, right? And I think that that's more important over everything. Let's not try to play the hero. Let's sometimes try to play the returns. Thank you, Raghee Horner, always joining us. Simpler Trading. You guys check it out. And I'm also going to throw in the chat here, the countdowntrader.com. You guys check it out. Definitely give it a check out if you guys haven't done so before. There's some free webinars and definitely some great kind of blog posts that you guys can check out. Always good to have you. And now let's go over to PPI that's coming. Appreciate you here today, Raghee. All right, so PPI is going to be coming in soon here. Joel should be joining us in just a second. Look, he even has his ES ready for us there. Joel, you're ready? There you go. He's back.
I'm ready for the number. What do we got here? I'm going to the official clock. I'll just go wide, and then you can give the expectations. It's all about that low, the current lows, the last few lows, right into the 45.70 area. They'll just make it easy. 45.70. We're 12 handles away from that. Bulls have to defend that. On the upside, get back into that 4,600 handle, and I think it'll be thin on the upside again, because our daily high is way up there. What are we looking for from the PPI?
All right, so I'll bring in here Benzinga Pro, of course, and you guys can always check this out on the calendar widget here. As you guys see me pull it up here, producer price index year over year. We're going to look at the month over month number, which is 0.2. That's the consensus right here. Prior was 0.1. And of course, keep your eyes also on core PPI. That month over month also expected to come in at 0.2, prior 0.1. Let's see what happens here. Of course, a lot of people have a tendency of looking at PPI as more of the leading indicator. So let's see what the market reacts here. And let's see if we can actually get a lift.
10 seconds. The initial move, the algo jumpers are just jumping. Really not a big move yet, not a spike yet. Moving a little bit higher. We do got a double close area at 85. So not good. Hot. Is it hot? We spiked down to
Really,
76.
really choppy.
Yeah, it
Look
just
at
went
that.
wide. It went for 445.90s
Really
down to
wide.
445.10s almost there for a second. And
Is it
then
out?
really, I think it is. Yeah, you know how they're quick with
We
it.
got to
Here it is.
co-locate.
PPI June month over month 0.3 versus 0.2 estimate.
Ooh.
Core
hot.
PPI at 0.3 versus 0.2. Both of them coming in hot. Also, year over year core PPI outlook also coming into 0.1% hot. But I mean, it's not the biggest, move higher. It's only about a 0.1, but definitely not what the market probably wanted to see today, as it takes a little bit of a hit. It's not a big hit here, right? We're still holding kind of pre-market support.
Oh, we're
Let's
still
see if
holding.
we
We're
can
still
hold.
holding the daily lows. I mean, but it's kind of like you're hanging out here too long.
Exactly.
That's the
The
formation.
market is just heavy. We keep saying it. And sometimes the numbers don't even matter as much as just the feel right now. And the feel right now, we've got a pretty good feel for it on this show, is anytime we're getting a pop, they're just selling. And you know what? On the bad news, the dips are not getting bought. So you're getting a dip here. Maybe we chop around. But when you get those pop backs, I still think you got to be raising cash in this market here right now. You're sitting all in on margin, you're getting rocked. The upstarts, some of the little
Oh,
stuff
don't
has really
mind.
been killed. But some of the bigger stuff, value's holding up okay. Value's holding up okay. But, we know that the mega cap tech is not. Like, I mean, Microsoft just quietly off, 15% from the highs. So that's a pretty serious sell-off here we've had for Microsoft here now. And people are going to say, well, this is the dip I was looking for. I just feel like it's turned, though. It's not just going to turn on a dime and we're just going to go back into rip roaring and rallying, because I think you got overhead supply now and you've got people caught. And that's what keeps building here. And that's why we keep remaining on the bearish side, at least for the short term here right now. We got to get a bigger correction in the indices. We got to get some of this back here. Right now, it'll be healthy. And I think you're going to get, to Raghee's point, I think you're going to see a lot of chop through August. You're going to get more opportunities. There's no reason to panic and sell the dip, because if you were panicking and selling the dip 2 days ago, you had the nice rip to sell yesterday morning. I've tweeted out multiple times this as reminders. Every time we rip up 30, 40 points, like, it's a good opportunity to sell stocks. It's a good opportunity to sell stocks. So you'll get enough more rips. We'll probably, maybe rip higher the next day or two again, give you an opportunity. But right now you can see the path of least resistance is lower.
Yeah, and just alluding to that, now you have people that are shorter term, or the algos or whatever, that are coming in and buying these dips, right? But they're not looking for the biggest move on the upside. They're not looking for 4,600. So the lower that you go, these intermediate and shorter term traders, they're going to be flipping out earlier. They're going to be flipping out of the people that are like, wow, I need to sell some size. I need to get out of this position. We also talked on, Mitch wanted me to bring up the TLT. TLT is trading in the red. I mean, I think what we had talked about is this number really is not reflecting the crude oil rally, which was late. So I think what the trepidation is for people is that next month's number is, chances are it's going to be worse than this one. But we just went, we did it. We beat, like, what, 10 times in a row, 11 times in a row, just like the market. Everything just can't go in one direction. And we had really come down in the inflation, not to think that we were going to hit a little bump in the road at some point. I think is way too optimistic.
Where would you jump in here, Money Mitch? I'm going to throw it to you. We look like we may breach yesterday's low, but it's there.
Yeah.
It's right here. We're kind of trading there right now. So it's obviously a key breakdown, because you got a triple bottom here on the SPY. I'm looking in the 445 area here. If we do indeed open below 444, that would be a breakdown here from the 3 previous days, which is not good, especially after reversal we had yesterday morning. What are you eyeing? What are you eyeing on the SPY? Bring it up here, to say, hey, okay, we've corrected pretty well here now. Raghee was talking about, corrections on the SPY to find obviously an area where she wants to go long. Where would you eye it, Mitch? Like, what are you looking at? What
Yeah,
level?
so like yesterday I was watching that 450 on the SPY, and I wanted to see if we could recover that 450, because we'd start to get back above that 9 EMA. Remember how I was talking about how the 9 EMA a lot of the times is going to be your momentum average, right? That's the only way I look at it. I don't necessarily want to trade too much off of that, but I want to use it to tell me how the momentum is going. Now, what do you see on the momentum here? So the 9 EMA is staying at the top of the price action. Shows us more and more how every time we're going up to resistance, it's rejecting those levels. So now I'm looking to see if the 50 moving average can hold. This is one that a lot of traders look at, right? The 50. You hear it all the time, the 200 and the 50. That's why I leave them on my chart. That's slightly right below here towards 442. So that's why I'm thinking that maybe today we could get into that space, which would bring us also into this gap space where the SPY gap before. And so it could bring us into that gap, and then we could hold off of maybe the 442s. So that's going to be the first level that I'll
No,
look to see if the buyers
For
start to step in.
first, well, I mean, you guys or Mitch. I mean, these numbers are so close. I mean, we're talking about a move.
Yeah,
I
we're
mean, I don't even.
talking.
Yeah, if you don't even want to, I mean, you're talking. We had the move.
Maybe
I don't know
he's
if you
talking with
go.
his day trader hat.
Yeah,
though.
I'm talking about day trader
longer
Oh.
hat.
term.
Day trader
Let's
hat.
throw in
That's
the
what I'm
investor
talking.
hat. Let's take the day trader
Investor
hat. And
hat,
throw it
then
out
we
there.
got to go back towards the
Yeah.
200 next layer down, which is shaking all this real kind of bullish action. And that's why she was giving the 200 day, which would be
I know,
right
and that's
back
what I was
down
saying.
into
That's a
that
long
spot.
ways down. If you think we're
Yeah.
going back to the 200 day, and obviously it can keep coming up too, so maybe we meet it in the middle somewhere. But
True.
that's the bad thing about moving averages; they're always moving.
Mhm.
That's down to 415, right?
Yeah.
Yeah.
Like
And
we're
then-
445. At 415, we're talking to fall another 8% from here.
Yeah. Yeah.
That's a serious sell-off. I don't know if I'm that bearish.
Oh, I'm not saying I'm that bearish, but I'm just thinking, you had look at those four green candles like that. I mean, they're thick and they're big, and now you're starting on a red one. So after one red one, you usually have another red one. So I think we use your 200 days or whatever, but of course, we're coming in the rocky month of August. That's happened and everything. But for me right now, I mean, we're still, to me, we're still pretty close to the darn highs of the move.
Yeah, we are.
Why would I be thinking about buying long term when we're right up here? We're right.
yeah,
got
long
back
term,
where-
I agree.
Well, right
Long
where we
term
got
doesn't
back
make
in
sense.
April. Unless you're a young kid like Mitch and you're putting in $200 every month in your
Not
SPY
dollar
and the
cost averaging is
QQs.
smart.
Yeah, for young people, I think because how are you going to catch it? How are you going to catch it? But
And the market timing is really difficult. I mean, to time, and we try to do it on this show, and we do pretty well in the day trading aspect of it. But from an investing standpoint of it, I can
Hard.
time the outs pretty good, but then I don't get back in. So I'm like, you'd be better maybe just a dollar cost average in your long-term portfolio, maybe on the indices, but it's no fun. I mean, we're on the show. We're trying to have fun too. We're trying to beat the markets. We're trying to find new levels. We're trying to catch the turns. We're trying to do stuff like that. We caught this turn pretty well. With this downturn here, you could kind of feel it, that key reversal day, and then they had the shakeout the next day, but that was the day. That key reversal day was the signal, and then the bounce back the next 2 days was the opportunity to get the hell out. And obviously that, it was prudent because we've come off significantly here now. But, putting the investor hat back on here, what's on your shopping list? I mean, let's talk stocks here in chat. We might as well throw this to you here too, because we've teased it.
Ticker
We want to do like an
time.
extended ticker time here, last 20 minutes of the show. What's on your shopping list, and let's talk about, where we think, there's opportunities long-term. So put our longer term hats on. We can talk the day trading a little bit in here too, but give us your shopping list here, chat. What stocks do you guys and girls like right now for the next 5 years? So let's do a little investing show here. What stocks do you guys like for the next 5 years, and what stocks do you guys want to talk about?
All right. So there's going to be a lot in the chat. If you guys see anything
all
that
over
you
the
guys want
place.
to go ahead and grab, I'm okay with you guys grabbing one too, but I will start it off here. I'm going to start it off with one that a lot of people are looking at on this decline, which is Francis is talking about Square. Let's talk about that one really quickly. Let's try to stay to about a minute on these so that we can get to plenty of them. My outlook is 60. I'd take it maybe a shot off the 60 off the kind of the 52-week low.
And I kind of like the Square just from a day trading perspective because I think it's oversold. And I think at 55 is a hard level. I don't know if you're going to get all the way there. You might, maybe you want to wait for that because we do have some momentum to the downside. But give a perspective. The PE on this puppy is still 36. So it's not a cheap stock. And that's the forward PE. It's not a cheap stock. At 55, the PE probably comes closer to 30. 31, starting to get more to a reasonable, but still not that reasonable here. So from a valuation perspective, it's not that great, but the hard level is 55. I mean, I think I'm going to have an order sitting out there 55 just in case. Is it going to bounce before that though? Hard to say. I think if you're really looking at support though, it's actually down at 55.
I think, well, first of all, full disclosure, I did put money. I did invest this week, and it was T-bills. and it was 5.5%.
Ah,
So
Not
that's
a bad
what's
idea.
that's what's on my shopping list. And since you know, we very rarely sell stocks out of the portfolio and do things like that, the best defense that I can have, timing the market is hard with options and or futures. So that's what I'm going to be doing. You know, I even went a little farther out than the 6 months. You know, I think I even went on one tranche. I think I went like a year and a half. It's just I'm just uncertain of the market. But I'm going to take a different perspective on these stocks. And I know I always try and pick a double bottoms and double tops. I'm just going to say, show me you can hold 64 right now. Like, okay. And then tomorrow, if I'm eyeing this stock, then I might bring that level down, right? And then bring that level down again. Because then if there is, yeah, maybe you might miss a little bit of the chunk. But Dennis, you always like when something comes down, consolidates, and then makes a little bit of the move. Right now, couple lows in the same area, you know, consolidation, hold. I'd rather buy on strength than weakness.
Here's one we haven't talked about in a couple of weeks. What about Ulta?
Oh, one I
Ulta
haven't looked at
Beauty.
for a long time. I have no idea where it even is here right now.
Yeah, that's
Oh,
why
it's
I
rounding, coming around here. It looks, you know, actually like it's trying to find, you know, a little bit of support in here. And it's funny, you know, it's not the same as all the other stocks. Again, like I like to go into the pro. When I haven't looked at a company for a while, where's the PE? It's 17, 18, kind of reasonable. It's pulled back. It's Ulta Beauty one that you'd invest in. Yeah, maybe. It's not even a crazy valuation here at this point in time. I think I'd put it on my shopping list. I'm not sure if I'm striking today, but because I think the stock market's going lower, but I'd have it on my shopping list.
it's not a bad one to at least keep in mind, right? It's
What about
been
a Head and Shoulders top there?
Joel's got his bear cap on.
I don't know. I'm just trying to be honest
You
here.
might be right.
You had a major drop off earnings. You came back. If you're a gap filled trader, man, look at that. You filled
Filled
the
the gap
gap. You're coming
perfectly.
back. Yeah. I mean, this one has more identifiable support here at you know, the 435 area. Yeah, but you're $14 away from that right now. But I guess if you're gonna look beauty, why don't you just hop on the beauty train and go to Elf Beauty? I mean that that's been the performer. I know you could be chasing it, but could have
You
said you
were
were chasing.
chasing Joel.
Yeah. Well, look at you could have. What about Celsius Holdings?
I know.
Well, you
Chasing
tell
has
me.
worked this year.
Yeah.
I'm going to tell you
Yeah.
on Elf, though, the current PE is 75. The forward PE is 58. They are starting to punish high PE stuff. This is not the stuff you want to be buying in this environment here right now. So I know Elf Beauty's sitting up and people are momentum traders. What are you talking about, Dennis? You want to be buying stocks that are strong and selling stocks that are weak. Yes, but you can see the tea leaves here is what has been breaking over the last 6 days is high PE. They haven't come for Elf yet, maybe because I had a really good report, but eventually I think they come for it too.
Short Elf, buy Alta spread. What a beautiful spread that would be.
I'm not saying that in the long-term account. I'm not saying that in the show. I'm just saying I'm not investing in anything high PE right now.
Okay.
It's
Good point.
just, and I'm not even trading stuff high PE from the long side. Even though this Elf chart looks fantastic with the momentum, I'm a relationship guy. I'm looking what's been happening with high PE over the last 6 days. Does anybody know what's been happening with high PE? They've been killing them. They've been crushing them. NVIDIA, we talked about this, and finally it starts to break down. So, I mean, they are rocking high PE right now.
Okay, what about
high PE? Not for me right now, not in this environment. There will be an environment again. This actually probably sets up where you could try it from the short side, maybe lean on the high, the 137 there, because maybe, just maybe, the next day or two, they come for it too.
All right. Let's keep it moving. We got a lot to talk about. Let's go to DraftKings and Penn. I'll put them together because, of course, it's something to think about as you're starting to see DraftKings pull back. You saw Penn pull back. Is this the opportunity here to get Penn? I'm thinking yes, but I'm trying to let the market slow down, man. I'm trying to let the market slow down. I want this now, though, because it's washed out all those people that bought on the news.
But now you've caught all those people too, so you have a whole new group of bag holders on this.
I mean, but how many bag holders are there? And if they get back to 28, they're
all of them.
they're gonna get
Everybody
back
has
out.
been in this. My wife is a bag holder on this one too. Small size position, which has gotten a lot smaller over the course of time here. That we invested in Penn. PE is very low on Penn. PE,
Yeah.
the Penn PE. Let's go grab it right now. It's low, man. It's 12. It's 5. It's currently 5. Forward PE is 12 because obviously. So I'm just grabbing that from the pro. The PE is low on Penn. Could you invest in Penn right now and make money over the next 10 to 15 years? It all depends on how well, one, this ESPN deal works with them, but two, how
And
much
how long is that
DraftKings,
going to
how
take?
much
Yeah.
win, all that. I mean, you're not buying best of breed here with Penn. We'll tell you that much. So, would you buy the DraftKings pullback? I'd probably be more interested in the DraftKings pullback than the Penn pullback. Now, DraftKings, a different story. I think you got room to 25. But as you get to 25, maybe that's a natural bounce area. I think that's a good level for DraftKings. I'd rate that one down your shopping list. DKNG, 25. Rating it down my list right now.
Yeah, giving back all those gains. And Penn, I mean, if you were, and I mentioned this that day when it popped up, I said if it comes back, it fills that gap at 24.92, which it is doing right now. If it could come down here and just hang out for a couple days, and consolidate, then I wouldn't mind, a lower risk trade. Of course, you would have to lean. I wouldn't lean all the way down to lower the moves, but Dennis mentioned about creating a whole new set of bag holders. On that day when it shot up, it traded almost 50 million shares, right? So there were some buyers and some sellers in there. The buyers are not too happy. So that's what will be creating the overhead supply. DKNG, give it all back. I've got to let the dust settle. What level did you give, Dennis, for DKNG? 25. Okay, I'll stick with that one.
One thing that I would say is I do have a friend that invested in DraftKings like down close by like 11s and 12s, and now just recently took majority of it off and used that reward that he got on DraftKings to go and then buy his Penn position long-term investment. And so I told him, hey, that's doing it right in my book. You know what I mean? You made some money. Now you're going to go ahead and take a shot on Penn down here at the bottom. I didn't mind that outlook at all. So just to kind of give you at least a story about someone that's actually investing in these two.
Penn's trying to change their story, and it might be for the better. Obviously, they've Portnoy, done with Portnoy. They're trying to move on because that's maybe held them back. At least they feel that way. And they're trying to team up like Disney. So they're trying to do some different things and change it up. It's to be determined whether that plan works or not. But reasonable valuation on Penn, I'll give them that.
All right, let's go to the one that we've been talking about this plenty of times, but let's do a quick talk on this one, just Disney's levels, because I saw it mentioned in the chat like 8 times there.
Great day for yesterday.
Mm-hmm.
So
you investing?
love seeing.
You already invested, right?
What's that?
You're investing, or you already invested?
I'm not in Disney. I have
not
been
anymore,
in
right? Yeah, you got out of that, right? Joel, are you investing?
I sold at 105 and 115 on the last pop up, and I know people give me a lot of heat for Disney. I've made money every single time on it, so it was a good trade. And I got out because I just wasn't confident in my main reason I was getting out was because they've just screwed up Disney Plus so much. And I was saying before, and I've argued this, is the parks were firing on all cylinders, and I said if those parks ever stop firing on all cylinders, the stock's in trouble. Now Disney it's 10 years, it's gone nowhere. Are they going to figure it out eventually? Probably. They're probably going to figure it out eventually. Is Iger that person to do it? I'm not sure. But what you have in Disney yesterday is just a relief pop. And we talked about this, where expectations for a stock like SMCI were through the roof. Disney's expectations were in the gutter and is good enough. They're talking about raising the price on Disney Plus. They're talking about the cost-cutting measures working pretty well. They're talking about, all the stuff that investors want to hear because you know what? That top line's not doing that great. So is this something I want to invest in long-term? Maybe, but 85 a good level? Maybe, but man, the story is really hurting right now. So I'm sitting on the sidelines here on Disney, watching it on the shopping list, but not striking yet.
I think of all the stocks that we've talked about, and I think we did. I'll have to double check. Maybe a very, 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 very small long position in one of the portfolios. But I think if you're trying to set it and forget it, and whatever they'll figure it out or whatever, I think you go. Take a look at 90. If you could get 90 and not even worry about the 85. Maybe risk $10 on it. And that will hopefully that will give you a lot of time, because if they do turn it around, that $10 risk reward ratio could really be good. You could see a lot if they figure out. If not, you lose your 10 points, whatever. But that's the way I'm looking at it. And yesterday was an impressive day. And the longer this
Very.
thing start to build a base at 90, then the more bullish I'll become from a technical perspective. So
You've got a lot of support 85 to 87. So there's a hard level there. And, buying these stocks sometimes when their stories are hurting isn't a bad idea long term. So if you're a long term investor, do you make money buying Disney at 86 or 87 10 years from now? I think so. I think they'll have it figured out by then. But I'm a trader and my time horizon's a hell of a lot less than 10 years. So I'm staying away from Disney for now.
S&P's leaking, taking out the lows of the session, down 19.5 handles. Limited daily support in here, folks, until the 44.40 area. That's for
Holy
today. That's
leaking
20.
in
That's
here. Taking
yeah,
out key support is the problem here on the
Yep.
indices. That is a serious issue here because we have the triple bottom here on the SPY at basically 445, call it. We're going to try to take that out here this morning. That's a problem. It looks like we want a room to 440 here. I do think you're going to get, I don't think it's going to be easy sledding for the Bears.
Never
And this
is.
has not been easy sledding
This is
for the Bears.
It's not.
So I think there's going to be some rip roaring, rip your face off rallies like yesterday morning where we rallied 50 points in a heartbeat. But I think you're using those opportunities to lighten up stocks.
Yep. I saw in the chat, I'm sure it was a joke, but I saw Tupperware. We won't talk about that one. Let's go to
Where's
shop.
Yeah, that's
why-
breaking now. That momentum is broken. Carvana, just a disaster from we talked about 2 days ago when they had that good headline. I was like, it's very important that it holds these gains, because if it doesn't hold these gains, the stock is in trouble. Look what happened. Didn't hold the gains, stock is in trouble. Momentum's broken. Squeeze apparently is hurting here now. The people who are getting squeezed now in Carvana is the longs.
Shop, 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 shop. We wanted this, Dennis. Where do we go looking at it now? We wanted it at 40.
$45. Me and you will buy shop. If you,
All
hey,
right.
if it gets down to
Whoa.
$45,
Call me.
smack me in the face, Mitch, and tell me to buy
Yeah,
it.
call me, Dennis. If you see
Call
it
me
down there.
maybe.
Call me.
I'm
Call
buying
me,
it.
Call me Shopify.
I'm buying it. I'm buying
45.
it. Well, you guys are never going to get
You're
it.
buying
'cause
sooner?
I'm buying it at 48.
You like it there?
Joel's coming up
Yeah.
48.
Yeah.
What about
Okay.
50? Fill the gap.
No.
Yeah, I like-
that fills the gap. 48.
You
Yeah.
know what? I'll take
Joel's
both
a
your
cap
guys'
filler.
level. I have on my chart 44.69 and 48, so somewhere between there. You say 45.
All three of us like it down in the 40s.
Oh, now you
mid-40s.
know it's going to 30.
Oh, it's going to 30. Me and Mitch are all
We'll
over
keep
this
an
at
eye on
41
it,
if we didn't
guys. We'll
buy
keep
it.
an eye on it.
I
I think
can't-
another thing to
we
look
won't
for.
miss this one. We won't miss it.
Yeah, and then we buy it at 48. And
You know what's gonna
44
be a
and
good
30, and we're
indicator?
like, why do we buy Shopify?
Amazon fill the gap. Amazon,
Never
fill that
invest.
gap for me. Fill that gap. You had a great report. I'm waiting for you to go back up with the market, but the market's coming down on you. And I think that you fill that gap, and then maybe we see Shopify come back. That's just my outlook.
I toyed with this Amazon so many times, and I almost timed it like super really bad. Right when it was up near the highs, I'm like, this thing's gonna split, it's gonna rocket. I said, no, I'm gonna wait, and then I waited and I waited and I waited and I waited too long. So, but short term, I like the 130 area. That would be a nice gap fill for
Yeah.
Amazon.
It's not cheap. I'm still long in the long-term portfolio with my wife's RSP, but it's been a good run. We bought this down at low 100s. It's 137. It's been a pretty good run. People sitting on gains. It's tempting to take the gain here. I look at that bottom right chart and I see that 180 down to 80, now back to 140. I mean, there's an argument here that this is just all of these stocks. Like, bring up the QQQ in that bottom right chart. They look similar, a lot of these. Some of them making new highs, but we didn't make new highs. There's an argument here that this is just an SOB of a bear market rally. And you know what? Like, it's been a bull market for like the last 6 months, but you still haven't hit those highs from like 2022.
Nope.
And wouldn't it just be awful if they actually gave these stuff back over the course of the next year? It'd be really awful. And I'm not saying that's going to happen, but I'm saying that scenario is not off the table either. The reason I don't think that's going to happen, though, is because the Fed has so many bullets now.
It's a lot
the stock
different.
market really started to roll over. The Fed can just start lowering rates, and that's going to propel the market up. So I think you do have to stay with a shopping list here and buying stocks, because I think those October lows, that, a lot of people hope that we revisit may not come because the Fed simply has too many bullets now.
And also, it just like the rotation. Like there's so much, there's being money put to work. There's being money put to work in ExxonMobil. There's money being put to work in value stocks. There's money being put to work in a lot of different sectors. So it's just, we haven't had that just all out whoosh, COVID sell everything mentality. We've always had some kind of rotation, but Disney was up $3.50 yesterday. I mean, there's a stock that's been hit. I mean, you just have to look at where they've come from and potentially where they could go. But Mitch, what else are we missing? Anyone that
The
in
Scholar
here?
wants me to talk about MaxN. It's not really for the investment, but it's because it's getting hit today. So he wanted to know what's going on. Of course, this reported earnings and more we keep getting from solar stocks. What disappointing
Disaster.
revenue
Oh.
outlooks. We got it from ENPH. We got it from SEDG. Now look at MaxN. It's continued this, but I've also talked about how I didn't want to go shorting solar because energy has stayed so strong. So it's a little bit of a fight on both sides of that. Like you can see it on First Solar. First Solar, I've been watching to look to see if it breaks this 200, but then it's just right back
holding
up.
up. It's the only one.
It's the only one. So I get a
The
little
only
bit
one holding
scared
up.
seeing the leader hold up here versus the leader break down. But definitely the other ones are breaking down: EMP8,
They all
SEDG,
are.
and now MaxN.
First Solar is the only one holding up, and it became best of breed somehow here. And it was
it
always
is.
like ENPH, and we were talking SEDG, and somehow First Solar has taken over the reins once again. It was like the first, where we talked about it years and years ago, Joel. And somehow First Solar has become best of breed again. And then there's everything else has just been an epic disaster. Another disastrous stock, 26 down 26 more percent here today. Maxi and Solar. I don't know when the solar stocks turn around, but I can tell you they are leading the charge on the downside. SunPower, which was back in the tech bubble, of ridiculousness, was $51 or $57 a share. It's $8. I mean, there's so many that are just destroyed. And it looks like Tan still wants to go lower here to me too. So I don't know. It's hard to come in here and just invest in solar stocks because they've been a disaster.
Just short term here on this Maxon. We know how these moves can continue from the pre-market trading, but I did see something here, and it's relevant to where we're at. And I'm just going to let you guys know that around $16, we had several lows in February. Now in the pre-market trading, how low did we? We're right there. We're right there right now, and we're not really bouncing. But several daily lows in the $16 area. See if it catches a little bit of any kind of bid there. That's lows back in February. S&P's down here now below the
Wow.
trio of lows for the week, and man, the old Friday, ending the week. Last Friday we ended it weak, and they rallied it on Monday. Had a nice fake out, but daily support for me, as I said, it's getting close to 44.40, and that probably coincides with 400 in the SPY.
All right, last one I'll throw in there. I'll do Netflix, just thrown up there. It doesn't look too bad to kind of take a look at. It's definitely been pulling back a little bit since the recent earnings. I mean, this has been a big run since the bottom, right? I mean, I think at some point you got to I'm looking for pullbacks back towards the 200. That gets us closer towards 360.
Oh. and you know what? We got a nasty head and shoulders happening
Nasty
here on
head
the
and
top
shoulders.
right chart. This is
Nasty.
very well-defined head and shoulders. This, I agree with you, Mitch. I don't know about the 360, but it looks like it's ready to fall off a cliff. If I was in long Netflix, I would sell it right now. That's my opinion. Just my opinion. But if I was long Netflix, I would sell it today. I'm not long it. I have no trade in it. But I look at this thing, and it looks like it's ready to fall off a cliff. And they're hitting higher PE stuff too. The PE multiple has just expanded to an unreasonable level where it's 50 times earnings or whatever it is now, 45 or 50 times. It's just too much. I love Netflix. I think as a company, they're doing everything right. The stock has just run too far, too fast. And that chart does not look good for the bulls whatsoever.
Mm-hmm.
Oh, Rock of Gibraltar here, just at the 440, 441 area. I wish we would have talked about that earlier in the week. They missed the 480. They missed the 460. The gang is there at 440. This the critical level on the downside here is 415. That's all the lows. That opens up the floodgates to 400. But I just think this chart is going to look like the Tesla chart. And I taught someone asked me about this yesterday, and it just looked like same thing. You hit the high. Okay, well, I can't get out at 300, but I'm going to try and get out at 280. Well, we lose 280. Well, I'm going to try and get out at 260. Well, now we're just the resistance is coming down, and I think that eventually, not going to whoosh down, but I think the big sellers, the overhead supply is going to keep pressing this thing lower.
I think it could whoosh down. I think this Tesla chart looks just as bad as the Netflix chart. It
Mhm.
looks like it's ready to fall off a cliff as well. If it loses 240, the huge support here is for 240. It had 2 lows back in June and then 3 lows here recently in 3 of the last 4 days in the lower 240s. If Tesla loses 240, you start thinking about 225. I think you'd lose 15 points in a heartbeat on this thing. I feel the same way about Tesla as I do as Netflix. I would not want to own this right now. This chart does not look good for the bulls.
Last thing on Netflix, I drew up here my rule of 3, and you can see here the green bubble. You see how theirs should be the breakout. We had that attempted breakout yesterday through this 1 hour pattern. This is a bullish pattern, right? And so once I see that attempted and fail, I look for an attempt to the support. I'll look for that attempt breakdown through the support today to get into that red bubble versus getting back above that trend line to the green. And so I use this all the time, guys. And you guys on live trading know that I talk about this. Has a tendency of working really well. We'll see if it works today. All right, let's go ahead. Let's wrap it up here. Let's go to the ES. Joel, what else you got for us? What levels should we be looking at as we, of course, get to there's a weekend? Any levels that you'll want to put out there for us to watch?
Right here, right now. I mean, you have the lows from yesterday, lows from Wednesday. So this is coinciding with a July 12th low. It's still in this area, 44.70. I mean, the Bears are, they're scratching their paws here, but we always know we get these pops off the open. So we'll see what happens. No daily support, no daily level until your July 11th low at 44.39. But who knows the path to get to that level, and even if we will get there today. On the upside, if they do want to have one of those 16, 17, 18 handle rallies, and you get anywhere near unchanged, it was an exact double close in the S&Ps, then that would be a real tasty spot for me. That's under the pre-market high. That's a double close at 85.75. I'm going to hop off. There's no pre-market prep plus today or closing print. Everyone, good, get out there. I'm glad you like the show, and maybe we'll try and do that a little bit more often.
Yeah, it was a good show indeed. I'm glad that you guys dropped in a lot of stocks out there. So always good to have you, Joel, and enjoy your weekend, my friend. All right, we'll get Joel out of here. We'll start wrapping up here. Dennis, you ready? Because I feel like today is going to be that day where
it doesn't feel like, again, I think you could get some rallies here. I think you got to be using the rallies to sell stocks. We get these outlier rallies. These are all been suckers rallies. The last week and a half, it's all been suckers rallies. And it's like, it feels painful for the Bears. I mean, yesterday morning, I was like looking at that rally yesterday. I'm like, I'm like, we're up 30 handles. And then we went up with another 30. And I'm like, am I wrong? And then boom, you look at like literally 2 hours later and that gives it back. You could just feel that the market is heavy. When you trade as much as I do, and every single day, you're in the trenches, you get feel. You can get the feel for it. And just right now, it just still feels heavy. Like those charts don't look great either, but nothing beats, feel over. Like you can look at charts, you can look at valuations, you can look at so many things. But what really gives, the seasoned traders their edge is that they're in the trenches and they got this like feel. And, I can't chart that feel. I can't do that. I can just feel like, hey, it's not that easy to sell the stocks, but it's really easy to buy them when I'm on the bid. And that's where, the path is turned. And it was the exact opposite a month ago, where it's like everything just goes up. Bad news, it goes up. This goes up. Well, that's where everybody got on one side of the market too. We had the Mike Wilson top, which I joke around about, but that might go down as the Mike Wilson top when he capitulated and said, okay, we've been wrong. He didn't go full bullish, but, he was getting away from his bear thesis, and that was right at the very top a week and a half ago. So I think he capitulated right at the top.
All right. Well, definitely you guys can catch up more and keep up with Dennis Dick, Triple D Trader. I will be watching to see if we can get that whoosh down And I always try to think about the psychology. And I think that that's also what you think about often, Dennis, is not only just what the price action is showing us, but also the psychology of kind of like the majority of traders. That's why I brought it up yesterday towards the end of the show, that the market loves to hurt where it can hurt the most. And it seemed like yesterday, what did it do? You started seeing a lot of people lean bearish. So it did that little rip up, squeezed them out, and then it dropped it. And I'm sure a lot of people probably got out of their short positions, then saw the market below their levels where they were looking at this morning, and then being like, man, I traded that wrong. But the truth is, the market loves to do that kind of action. So let's be careful with chasing on either side. We talk about this always, right? Chasing on the upside, chasing on the downside is definitely a lot of times a recipe for disaster. So be careful out there, traders. We'll see what happens. Keep up with Dennis Dick, of course, Triple D Trader on Twitter. Always good to have you, my friend, and have a great weekend. Take care.
See you guys. Good luck, everyone.
All right, now we'll bring you over to live trading. That's coming up next. Don't go anywhere, team. Let's get to the action and come check it out, team. Let's see what I can do today. I've been doing really well in my trading action. And right now in the swing trading action, I actually have no positions on. Zero. I took my money in the oil game just because I felt like, at this point, for me at least, it's more brake pedal on than gas pedal. We'll see when the gas pedal comes back. But for right now, I'm going to be a little bit cautious. Come over to live trading. Let's check out what we can do. Of course, we got Lord Ryan. We got Nick Brown in there. We'll talk about some news. Hit the like button if you guys enjoyed everything on today's pre-market prep. A little bit of extra ticker time for you guys out there. And always remember, you guys run the show also. So give us some feedback. Reach out to me, Mitch@benzinga.com, or hit the comments below and let us know what you want to see more or less of right here, of course, on Benzinga's pre-market prep. We'll see you guys a little bit later today and smash it up. Let's go to live trading. And I will try to do a little bit of some start swing trade later today because I have a feeling it's going to be an important day in the markets. Smash the like. Let's get over to live trading. We also got all access today. Let's see what we can do.